Hello and welcome to CMS Forex News. I'm your market analyst Nick Nassad. Today is Thursday, August 20th, 2009. The pound-dollar pair fell in late European after the pair climbed to test the 1.66 area in the wake of UK fundamental releases. Data from the UK showed positive retail sales for July, but also a record government borrowing for the month of July. Traders latched on to the second piece of news to pressure the pound, though the pair pared some of its deeper losses after finding a line of support at the 1.6450 level. We are seeing resistance and support trend lines converging, mainly with an upward bias, so it will be interesting to see if the pair breaks one way or the other when those two lines meet. The euro-pound pair, meanwhile, rose in favor of the euro today following a test of 0.8570. That effectively paired the euro's losses from Tuesday, when a better-than-expected UK inflation report favored the pound. We're seeing the pair, though, running up against the 0.8650 level, which acted as resistance to end last week. Taking a look at the UK releases, retail sales rose 0.4% on the month in July, a figure that met expectations, though it was slower than the 1.3% increase seen in June. On the year, sales rose 3.3%, which was the biggest annual increase since May of 2008. The data is the latest sign that the worst may be over for the country's recession. Though the better sales data gave the pound a boost, it slipped back on weaker than expected public borrowing figures. The UK government borrowed £8 billion in July, a record amount for that month, and a figure that was much higher than expected. There was no significant data from the Eurozone today, and the euro-dollar pair reflected indecision for market participants. The pair traded mostly sideways, though it kept its gains from yesterday. In late New York trading, the pair also managed to break above a downward sloping line of resistance. In the US, the Philly Fed index climbed to 4.2 for July, the first positive reading in almost a year. The result was unexpected and bolsters the case, along with the positive reading in the New York Empire Manufacturing Index, that the U.S. recession has moved past its bottom and is beginning to enter the first phases of a recovery. A second release, the composite of leading indicators provided by the Conference Board, increased 0.6% in July. That's the fourth month in a row that the leading index has been positive, another sign that the U.S. recession is almost over. Fewer job losses, rising stock prices, and a renewal of factory output show that the government efforts to stem the financial crisis and revive the economy are starting to pay off. Still, high unemployment will limit how much consumers spend, which will temper any recovery. A third release showed that the number of Americans filing new claims for unemployment benefits rose by 15,000 to 576,000 for the week ended August 15th. The number of total people collecting unemployment benefits the week earlier remained little changed at 6.24 million. The US dollar-Japanese yen pair paired some of yesterday's gains overnight, but after it met the downward sloping line of resistance we have been covering at the 94.50 area, it fell back down. US stocks are up today with the Dow Index reaching 9,350 and the S&P 500 moving above 1,000 for the first time in 4 sessions. The US dollar-Canadian dollar pair extended its losses from yesterday's session, with the pair sliding 120 pips to fall below 1.09. The pair, like the euro-dollar we saw earlier, poked below a recent level of support, though it remained within the lows seen from last week around 1.08. Overnight, both Germany and the Eurozone will post their preliminary or flash versions of their manufacturing and services PMIs, while tomorrow the U.S. will post data on existing home sales. And that wraps up today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.